All right, everyone, welcome back for another episode of Carnivore Trades. Today is Monday, August 22nd, 2022. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, here, so spiders down 2% today. A pretty good sell-off here on Wall Street. Triple Qs down 2.6 and the Dow down just under 2% there. You see the semis leading to the downside. Down 3.5. Apple even down 2.3. So even the mighty Apple is starting to fall here. Although still really no technical damage on this chart. This is still pretty much the strongest horse in the market, but a nice sell there. I do think it does come down into this gap at some point around 165. May get a little bounce at the 20 period moving average there on the daily, but then ultimately I'm thinking it's coming down to 157 there, and then really that 50% fib in that area. But overall here, we talked about this rising wedge on the ES. This is something I tweeted out last week, and pretty good breakdown there. Started to slip Friday, and then we really confirmed it today, and we're now closing below that 20 moving average there on the futures and on the spiders. You know, I thought that this morning with the gap down, we would have bounced. So, you know, right in, like in the morning here, we came down here, and I thought we would have bounced here, right in this area, maybe piercing the 20 moving average and then getting a bid. Usually you get that that first hit of the 20 moving average after you come from an extended place. Usually you get some type of reaction off of that. Doesn't mean we can't, get one tomorrow. I wouldn't rule that out here. But at this point, it's a pretty good sell-off. The only thing I would say that's kind of a red flag if you're a bear here is the volume's not really heavy, and on the triple Qs it's even lighter. I mean, that's really light volume there on the triple Qs. So no major selling here, but as far as the price action, it's pretty major. I mean, you just did technical damage on the Qs, closed back below this trend line, and you made a lower low. So the Qs have done just a little bit of technical damage here. And we've made note that the Qs have been the weaker ones, the weaker one here outside of Apple, as it really has not had the bounce that the spiders did. So if we look at, this reversal here from August 8th, the Qs barely made a push up there, whereas the spiders, had a huge thrust off of that. And so the Qs are a little bit weaker, which is not a good sign. You want to see the Nasdaq leading, you want to see tech leading here. The Russell did have a nice push off that pivot there from August 8th. So the IWM was holding up, so that is a good kind of risk on sign. But that taking a hit here, actually basically gapping below or right on that 20 moving average, and then closing below it today. So a little bit of technical damage here. There was a little bit of an uptick in volume on Friday. Not so much today here. We do have Jackson Hole this week, so it'll be interesting to see how the market trades into that. Spiders here probably want to go down and fill this gap at some point. If we don't bounce immediately tomorrow, I think we do go and fill this gap here at 411.35 on the spiders. And it may even get down to that 408 area, which would be that right in that 100 moving average there. So there's a lot of support here short term in the spiders, and I would expect a bounce going into that. There is a lot of I'm reading I'm sure you guys have read it as well. There's a lot of reports now that hedge funds are record shorting the rates going ahead of Jackson Hole, and I don't know what the Fed's going to say. I mean, they're probably going to say more of the same. It's going to be data dependent moving forward. But there is a short position starting to build here. So we'll see what kind of a move we get off of that. We did have a huge squeeze though. So again, a lot of those shorts did get squeezed out, but we're starting to see them come back a little bit here, particularly in the bond space. And this is what I've been saying here for a while, that the 10-year and the 2-year, take a look at the 2-year was down again today. Take a look at the yield curves again. Yeah, so the yield curves were flattening across the board today. 2-year down, 10-year yield up, 30-year yield up as well. So rates, again, have been kind of flashing this warning sign really since back here in early August that, this rally's not really, the market's not really buying it. And we're starting to see that sort of play out a little bit. Now, to be fair, if we just take a fib here on the spiders, again, the volume is kind of your first red flag. But the second one is that, it was a pretty dramatic sell-off because we gapped down pretty hard. But we're still just basically into like a 2-5 retrace here. It's not like this is a huge breakdown by any means. So this is sort of kind of like a routine pullback so far for the type of move that we've had off the lows. So it's a good sell. Nice little nice volatility. Nice to see volatility finally come back, but the market can still make a push up here, especially if the market likes what the Fed says at Jackson Hole. That's kind of the near term. I'm a little bit more neutral. Longer term, medium term, I do think the market heads lower, but I don't think that the shorts are necessarily out of the woods yet, especially with hearing that report about hedge funds jumping in short on those bonds ahead of Jackson Hole. If they're right, we could sell off very sharply. If they're wrong, we could have another leg up. So just be aware of that. There's a little bit of a double-edged sword here. But we are seeing some kind of signs of things starting to kind of crack here. Again, we talked about Bed Bath & Beyond last week. Meme stocks running, that's usually, dash for trash. That's kind of like, sort of what happens at the end of like a bull run. And then, of course, today, AMC gapping down 42% today. And that is basically a new 52-week low. It's very close. I don't even know what to say about this. This is just absolutely getting pounded here. And, basically back down to that 2021 level there. But what a sell there on AMC, 41%. GameStop not really going with it, down 5.5%. But memes starting to blow up here. So, we'll see if that is kind of a precursor here. And obviously, we talked about Bitcoin. We'll look at Bitcoin at the end as we always do. But that did manage to, kind of hold the losses. Rather, it didn't reverse. I said last week on Friday, the one kind of positive is that it's OPEX was Friday, so maybe some of that action was OPEX related, and then maybe over the weekend, the small investor could kind of bid it back up, but that hasn't happened. So we're seeing kind of these risk off signals here moving forward. But anyways, we'll see what we get this week, but I do expect at least a little bit more downside, at least at this point, probably to that gap fill there on the spiders. Unless we, it wouldn't surprise me, because sometimes when you come off of that, extended place and you hit that 20 moving average, sometimes you can pierce it. Then the next day you'll get a good rally, but I do think we probably go and test that gap fill tomorrow. At least that's kind of my bias currently. Anyways, let's flip over. Let's look at some sectors here. So we mentioned the semis earlier, down 3.5%. That's some technical damage there as well. So you have a lower low on the chart, and it looks like we have possible M-top in place on the semiconductors. Now you can get a little bit of a bounce here, but if we put in a lower high, I think you're definitely going to be headed down to this 217 area. And, if that breaks, this is probably going down to 208, 210. So semiconductors in a little bit of trouble here. And again, we've been talking about this lately. Where's the risk on? Where, I want to see the semis leading. I want to see cloud software leading. IGV, rolling over pretty nicely again. But just couldn't get through that red bar there. You just got above that pivot, and that red bar above it, really good resistance level. I love this short setup. I wish I had taken it myself. This is one of my favorite short setups here. When you come into a pivot high and then you have a red bar just above it, that's usually a really high percentage trade. And it started to play out, and you got a little bit of an uptick in volume today on cloud. Flipping back over to semis, though, before I forget, we do have NVIDIA earnings, I think, tomorrow. I'll have to double check on that. Somebody can correct me in the comments here. So we'll see. That will obviously be market moving, but not good to see that kind of technical damage there on the semis, and then cloud software unable to really do anything. This actually took out these lows here too. So it basically stopped at that 100 moving average. We'll see if it, if it pushes lower. There's nothing to say it can't go to that, right to that 50 there. Early, or as early as tomorrow or even Wednesday or so. So a little bit of damage there. We talked about ARC as well last week, continuing to kind of break down here. If this is, a new bull market, where's the risk on? These names should be surging right now, right? And they're not. So definitely red flag there for the bulls. XBI did fade off the highs again. It still has some support here, so it wouldn't surprise me if this gets a little bit of a bounce, but still kind of just hanging onto this area. So no real problems at the moment for XBI, but it did sell off a little bit today with everything. Transport's rolling over as well. Let's put our trend lines back on there. So, basically went up into the 200 moving average, kind of like the spiders did, and, put in this little topping tail. We just couldn't really take that out, and now getting a roll over there. Close below that 20-day moving average. But we did fill, looks like, we just filled this gap a little bit here. Next support area is probably that 100, but you're in a pretty decent zone here so far. I don't like that you close below that breakout bar low. That is a major red flag for the transports here on the daily, and there was a little uptick in volume, nothing crazy. I would have preferred, if we had done this sell off on 100 million shares on the spiders, I would say we're topped out and sell any rip from here on out, like 100%. But it just wasn't that heavy. It was a little bit heavier, and we're still seeing a little bit of a pickup here in the after hours as well. We're getting a little bit of after hours volume here on the spiders, so that's noteworthy. But overall, nothing with heavy conviction anyway. But it was a dramatic sell-off, at least as far as price action, and especially considering that gap down. Anyways, we talked about rates here. 10-year up again. Market's starting to realize, at least what I've been saying here, is that the inflation's not going away. Yeah, it might come down a little bit, but it's not going to go back to 2%. And I think that's what is kind of the concern right now, that the market is starting to come to the realization of. So interest rates up, 10-year up, 30-year up as well. The 2-year bond is getting hit. Let's take a look at HYG. So this one took a pretty good hit today, stalled out at that 50 moving average. That's kind of the area you broke out of, right in that kind of gap area. So that would be support. We'll see what this does. But again, this is not leading. You want to see this, if the Fed is supposedly going to come save the day, where's HYG? Why is HYG not rallying? So that is sort of my concern there from the bull side. Home builders, XHB took a good hit as well, gapping below that 20. Still has the potential to make higher lows here, so no real technical damage, but a pretty good sell-off. Your kind of target area would be that 50 and that 100. That would be your area in between there for a really good bounce, around that $60 handle, 61. So that would be an area for a little bounce play on XHB. But if it puts in a lower high, this can accelerate to the downside. Same thing with ITB. This one's a little on the weaker side, though, as you did take out that low from August 9th, whereas, the XHB is still a little bit above that. So a little bit more weakness in ITB. VNQ also a good sell-off. So this is a little critical. So we talked about last week, I said it might get a little bit of a bid here off that 120 moving average, because you got that little necktie there, but we gapped into that and then flushed. So this going down into that gap, VNQ is showing a little bit of weakness. So you close below this breakout gap. This was the CPI number, right? So that was the CPI gap. We closed below that. And yeah, probably wants to get back down into this gap here around that 95.50 area. And speaking of the CPI gap, I tweeted this out as well. We've basically erased that on the spiders. So definitely noteworthy there, but nice little sell-off today. XLF, we talked about how extended this was. I said, I don't like, this is not healthy when you gap up like that and leave those big fat gaps on the chart. And we gapped lower here right into the 120. So short term, you're probably going to be headed down to this gap here. So gaps everywhere on these charts here. And then XBD, how the mighty have finally fallen here. Now it's still, let's give it credit. It's still holding that 20 moving average for now. I said that this would probably be a good bounce area because you got the 20 and 200 right in this kind of zone here. So it wouldn't surprise me if it held that tomorrow, but after that, there's no support here, and that's the concern I've been saying. There's no flagging, no consolidation. You've never had more than a one-day pullback here on this whole run. You had a two-day pullback here. Oh, big deal, right? All the way back here, but there's no support. So all the way down to 425, 430. So this thing can fall, and if it gets going, this can accelerate pretty quickly, just as quickly as it went up. So be careful of XBD and the financials here moving forward. Anyways, let's move over to energy. So the Saudis really just said, screw you. And they said, basically we're going to cut production. We no longer want to do this crap anymore. And we had a nice sell-off in crude, and it rallied right back up. So crude right back above $90 again, just like that. Nice, potential little higher low there. I mean, it's minor, but you did have some good volume behind it. I still think we get another flush here in crude. That's kind of my bias right now. But if it starts to show me a bullish pattern, like it wants to move higher, we'll reevaluate it and maybe we can jump on. But for right now, I'm still giving it that bias down into the low 80s, maybe somewhere in that range. But nice little reversal there on crude. And it had good volume behind it. So we'll continue to watch that. XLE. It was the same kind of deal here. So intraday, gap down with the rest of the market and then just powered up right here, and almost looked like somebody probably knew this was going to come out because it bottomed, well before that news broke. You can see the news broke there. So, you know, somebody always knows something. And nice little rally back there for XLE. But you still have this kind of rising wedge pattern on the daily. So that is my kind of concern there. Same thing with XOP. That actually closed green. And OIH still kind of got like this kind of wedge pennant kind of pattern there on the daily, which, you know, if you flip over to the weekly, that, you know, is kind of like a bear, a little bit of a bear pattern, but inside of it, you do have, you know, a little bullish inside bar. So could go either way at this point. You know, it's, you know, just let the charts, we'll let the charts tell us a little bit more here moving forward, but I'm a little bit neutral right now. I mean, long term, medium to long term, I'm really bullish energy, but right now I'm just waiting for my levels to get hit. Anyways, nat gas, you know, got all the way up to $9.98 today, and then pulled right back off of that. Not very much though. I think this wants to pierce 10. Might even do it tomorrow. You can see here on the intraday. Oops, that's the weekly. Intraday. Look at the volatility here. So somebody was front running this and saying, you know, I'm selling right at 10 bucks, but I don't want to let it get up there. I want to get in first. And they sold this thing all the way off to about 940. So pretty incredible volatility, but it recovered nicely. So I think this wants to get through $10. I'm not doing anything with it right now. Got to get a little bit more extended for me in order to be interested in a possible short at this point. But nat gas is just holding up so well right now. Can't really say anything bad about it. And speaking of holding up well, how about that dollar index? Putting a lot of pressure on stocks today. Again, up 75, just about 75 basis points here, up just under that 109 handle. Again, I said I'd be more comfortable about a top here if we had hit 110. I think we're going to do that here. We probably do it this week as well. So dollar index getting a power surge here off the lows, and it's just really strong at the moment. So that's really all I can say about it. And then gold here, I do think gold is in the process of trying to put in a higher low here. So we talked about this trend line, been showing you that pretty much every day, which we pierced last month. And now we're back testing it here on the daily. I think gold can put in a higher low here and have a little ABC up. Part of the reason I say that is take a look at GDX today. So GDX gap down with the market, finished up just 2 pennies, but that's green in a down market. And a spider is down 2%. For this to finish, for this to gap down and then finish rally back flat, that's actually a sign of strength in, you know, considering gold was down and having the miners lead, that's a strong sign. Take a look at Agnico Eagle here. That's a really good reversal pattern here on Agnico Eagle. So low, higher low, flag, pullback, gap down, engulfing reversal on the daily. That's a really good setup there for Agnico. Even Newmont, which has been down a little bit. Full disclosure, I do own some Newmont, a small position, but I do own it. This gap down and finished up 29 cents today. Again, showing strength in a down market with gold getting hit, with a strong dollar, with interest rates up. So the miners showing strength here, and that is a good sign for gold. So I do think gold's got a chance to put in a little ABC up move here on that daily time frame. So will be interesting to watch that. And, you know, maybe, I don't know, maybe the Fed says something really bearish, and maybe the hedge funds that are shorting right now are right, and maybe bonds start ripping, and maybe gold becomes a fear trade, and that's why gold and the dollar can, you know, move up together. It's possible. We can't rule that out, but overall, I do like gold here for a little pullback to push up. Silver a little bit on the weaker side, although I do like this support area. So I said if we can't hold this area, we're going to go down to that 18 kind of 75 area. We basically got down there and pierced it today, and, you know, put in a little tail candle. So this should get a bounce here in the short term, although it is a little bit on the weaker side. Obviously, you know, it's an industrial metal, so less of a monetary metal. So just keep that in mind. SIL and SILJ took pretty good hits as well. Did finish off the low, so again, they may have a little bit of a bounce in them here in the short term, but gold definitely holding up much better than silver here. And then platinum, nice little pullback here. I'm interested in playing this. We did play PPLT for a winner a few weeks ago. It was actually like a month or two ago now. And this is getting back into this kind of support zone. It's kind of back testing these areas. So I am interested in possibly getting in on PPLT for a long here, but nice little pullback there on platinum. I think this will have an ABC up along with gold, and then palladium, nice little dump today, and, you know, sold right back to that trend. These two trend lines have been, I mean, almost picture perfect here on palladium for the last really like 5-6 months here. But that's where it stopped, and it's basically just holding that 50 MA for now. And then copper here, I showed this in the weekend video, but It really went right to that 618 there a few weeks ago, and that's where it's getting a bid now. If this shows a bullish pattern here and continues to kind of chop sideways, this can have another leg up here. But yeah, copper just kind of hanging in there today, and not really too much to make out of it. It's just kind of holding up at the moment. So let's flip over to Bitcoin. So we kind of briefly touched on it earlier, but you know, down 2%, and you know what, textbook breakdown. You know, this is as good of a bearish inside bar on the weekly as you're going to get. I mean, that's a beautiful bearish inside bar there, and a nice breakdown. You can see the small rising channel there on the daily breakdown, and now you're starting to consolidate bearish inside bar here on the daily. So just, you know, not a good pattern here for Bitcoin. You know, it broke that channel. You know, what can you say? If this consolidates further, this can head back to the low. So I think Bitcoin is vulnerable here. Again, Ether's still holding up a little bit better. It's above that 50 moving average. You know, you will have support here at this this bluish trend line right now, but if this consolidates sideways, this support will become minor, and then your next level will be down to about 1250 there on Ether. So if this breaks, that's where you're going to be headed there. But again, crypto showing a little bit of weakness, continued weakness, I should say, and yeah, we'll just leave it at that for now. Anyways, let's flip over here to the spiders. One more look. Again, wouldn't rule out a bounce tomorrow, maybe a little head fake of a bounce. We did close below that 20 moving average, and the reason I say that is because the volume wasn't heavy. After hours, the volume is picking up still. We're at 74 million now. So the volume is starting to pick up. It's actually just getting to average or above average right now. Not normal to see that much of a volume uptick after hours. It's about 4:20 p.m. right now. So it is upticking a little bit here. Let's look at the futures actually. So the ES, I want to see if it's bouncing. Yeah, so bouncing a little bit off the lows here in the after hours, nothing crazy. But again, you can see that beautiful rising wedge breakdown there on the daily, and then, you know, that green bar low right at, so that's 41.1375. You know, and that should basically coincide with kind of this gap fill, maybe that low 410.22. On the spider. So that's kind of the area here on the downside that we'd be looking at for tomorrow. On the upside, you know, you got resistance here at this at the gap window there. If you get above that, then that opens the door for a move to gap fill. So we'll continue to watch that, take it one day at a time, and we'll just be waiting on that Jackson Hole speech later this week. Anyways, guys, gonna wrap it up here. Come find me on carnivoretrades.com, and I will talk to you all tomorrow.